Happy new financial year. Thanks for your company for the weekly this Friday, the 2nd of July. My name's Jessica Ramey. I'm a senior market analyst with Bell Direct. We'll step aside. End of financial year volatility reporting season. It's almost in town. It may be a month away, but if this week is something to go by, August reporting season could be a showstopper. That was reflected in some of the sector moves this week. This week, Telcos stole the show, up 2.3%, its biggest jump in 6 weeks. Why? Well, Telstra TLS, Australia's largest telco and the biggest provider of mobile phone towers with 2,800, said it's selling 49% of that business for $2.8 billion. That's huge. Funds will help pay down debt, while there's talk of a share buyback to return money to shareholders. So buybacks usually support share price growth. With that being said, Credit Suisse upgraded TLS, expecting its shares to grow from $3.76 to $4.15 in a year. Secondly, staples have been back in vogue. Metcash MTS and Endeavour EDV were standouts, up around 4% each Monday to Thursday. Metcash MTS, for example, they're the owner of IGA, Mitre 10 and liquor businesses like Celebrations and Bottle-O. They reported record group sales for their full year, which is April 2020 to April this year. Profit surged 30% and they also increased their dividend. Plus, they will also return $175 million to shareholders via a share buyback. Citi says this will support share price growth and boost earnings per share by 11%. That's not all. MTS has had a solid start to this quarter. Liquor and hardware sales are already up 30% each. As for other stock moves this week in the ASX 200, a lot of movement was subject to end of financial year rebalancing. For example, in the leaderboard, we saw Clinuvel Pharmaceuticals, CUV. They saw their biggest jump in 13 weeks, rising 6%. That's CUV. Harvey Norman HVN also up 6%. That was their biggest gain in 16 weeks. Now, HVN, for those that don't know, they were recently added to the ASX 100 index. Both stocks, CUV and HVN, didn't report any news though this week, and there were not any broker recommendation changes either. On the other side, some company news was not looked at favourably. Shares in Collins Foods, CKF, they fell 13% to $10.97. Now, CKF, they're the owner of the KFC and Taco Bell franchise chains in Australia. Well, they delivered record yearly earnings, including record KFC sales and profits in Australia, thanks to companies like Deliveroo and Menulog delivering their finger-licking good secret recipe. However, numbers in Europe were not so good. They were down. Overall, group profit rose 15%. So what caused the drop in their share price? Well, investment analysts were mixed on their results, particularly given their shares have risen 33% over the 12 months. That was ahead of CKF reporting their numbers. What does this mean now for investors? Well, UBS questions if record Australian sales can continue given the current lockdowns amid school holidays, and also thinks the business could be impacted by those minimum wage rises increasing. UBS believes business growth will continue but at a slower pace. So UBS downgraded the stock from a buy down to a hold, but does expect CKF shares to rally and hit a record high of $12.85 in a year. Now let's change pace, focus on a stock that could be worth considering. It's Life 360. It's gone viral on TikTok and is one of Bell Potter's top stock picks for this new financial year. Now, did you know celebrities have been reportedly buying the stock? Tony Hawk, Michael Phelps and Vanessa Bryant, Kobe Bryant's widow, are investing in the company and are also users of the app. And if you compare that to Afterpay, APT, that did a similar thing, benefiting from high-profile influencers adopting Afterpay, which led to increased APT market penetration. On top of that, earlier this year, 360 appointed Randy Zuckerberg, the sister of Mark Zuckerberg, to the board of directors. So what is Life 360? Well, for those that don't know, it's a market-leading family tracking app offering location sharing, driver safety alerts, and communication between families. Now, it's got 28 million monthly active users and is becoming dominant in the US and internationally too. Here's what Vanessa Bryant said about the app. Life 360 helps families feel safe and protected by making carpooling, pickup and drop-offs easier for parents, while also providing locations at their kids' schools, activities and sports practices. So there you have it. So what do new potential investors need to know? Well, Life 360 is expecting their annualized monthly revenue to grow to the higher end of their range of between 110 and 120 US million dollars. And that's thanks to user experience upgrades and a recent surge in downloads following the app going viral on social media. Plus, you'd also think that 360 could benefit from increased mobility and vaccination rates increasing as well. So 360 could be a COVID-19 recovery stock. Now, for all these reasons this week, Bell Potter came out restamping 360 as a buy with a $7.75 12-month target. Bell Potter says it's one of the most attractive tech stocks with a highly engaged user base, and it's also got opportunities to diversify their revenue stream. Bell Potter forecasts revenue to increase 40% from 2021 to 2022. And for revenue to increase by 30% up to 2023. But keep in mind, earnings and profits aren't expected to be positive until financial year 2023. So what are the next catalysts to watch out for? Well, lastly, there's an update in July and then a guidance update in late August. And that's Life 360. And that's also the weekly. If you've got any questions, you can leave them in the comment section on YouTube. From all us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.